Assalamualaikum warahmatullahi wabarakatuh. We are from Group 9. Our presentation about the completing audit part 2. The group member is Farrell, Pravia, Nakega, and me, Muhammad Farhan. The first presentation from Farrell. Time is yours.
Okay, well, thank you, Farhan. Thank you, Farhan. Now, this is our table of content. The first is final evidence accumulation. The second is evaluate result. The second is community discovery and audit committee and management. The fourth is management letter, subsequent discovery of facts. And now for the first is final evidence accumulations. Auditing standard require auditor to perform analytical procedures during the completion of the audit. These procedures are useful as a final review for material misstatements or financial problem, not during other testing, and to help the auditor take a final objective look at the financial statement. When performing analytical procedure during the final review stage, the partner generally reads the financial statement, including footnotes, and consider the adequacy of evidence gathered about unusual or unexpected accounts balance or a relationship identified during planning or while conducting the audit. Result from final analytical procedure may indicate that additional audit evidence is necessary. If this is the case, the auditor should perform additional testing to obtain sufficient appropriate evidence that the affected accounts are fairly stated. Auditing standard require the auditor to evaluate whether there is a substantial doubt about a client's ability to continue as a going concern for at least 1 year beyond the balance sheet date. Auditor make the assessment initially as a part of planning, but may revise it after obtaining new information. Auditing standard require the auditor to obtain written representation from management, usually in a letter of representation documenting management's most important oral representation made during the audit. There are three purposes of the client letter of representation. The first is to impress upon management its responsibility for the assertion in the financial statement. The second is to remind management of potential misstatement or omission in the final statement. The second is to document the responses from management to inquiries about various aspects of the audit. Auditing standards suggest four categories of specific matter that should be included. The first is financial statement. The second is completeness of information. The third is recognition, measurement, and disclosure. And the last is subsequent event. PCAOB auditing standard require the auditor to obtain written representation from management about its responsibility for the internal control over financial reporting and management's conclusion about the effectiveness of internal control over the financial reporting as of the end of the fiscal report. The second part is evaluation result. To make a final evaluation as to whether sufficient appropriate evidence has been accumulated, the auditor review the audit documentation for the entire audit to determine whether all material classes of transaction, account, and disclosure have been adequately tested, considering all circumstances of the audit. If auditor believe that there is sufficient evidence but they conclude that the financial statements are not fairly presented, they again have two choices. That is, the statement must be revised to the auditor's satisfaction, or either a qualified or an adverse opinion must be issued. There are three reasons why an experienced member of the audit firm must thoroughly review the audit documentation at the completion of the audit. The first is to evaluate the performance of inexperienced personnel. The second is to make sure that the audit meets the CPA firm standard of performance. The third is to counteract the bias that often enters into the auditor's judgment. Except for a final independent review, which is discussed shortly, the review of audit documentation should be conducted by someone who is knowledgeable about the client and the circumstance in the audit. Therefore, the auditor's immediate supervisor normally conducts the initial review of the audit files prepared by another auditor. And the next slide will be presented by Farhan.
Okay, thank you, Farrell. The third is communicate with the audit committee and management. The first three of these communication are required by auditing standard to make certain that those charged with governance, which is often the audit committee and senior management, are informed of audit finding and auditor recommendations. The fourth item, a management letter, is often communicated to operating management. Auditing standard require the auditor to communicate all fraud and illegal act to the audit committee or similarly designed group, regardless of materiality. The purpose is to assist the audit committee in performing its supervisory role for reliable financial statement. The auditor must also communicate in writing significant internal control differences and material weakness in the design or operation of internal control to those charged with governance. In large companies, this communication is made to the audit committee, and in smaller companies, it may be made to the owner or senior management. Auditing standard require the auditor to communicate certain additional information obtained during the audit to those charged with the governance, which is generally the audit committee. Thus, the auditing standard requirements are designed to encourage two-way communication between the auditor and those charged with the governance. There are four principal purposes of this required communication: to communicate auditor responsibilities in the audit of the financial statement, to provide an overview of the scope and timing of the audit, and the third, to provide those charged with the governance with significant finding arising during the audit, and fourth, to obtain from those charged with the governance information relevant to the audit. Many CPA firms write a management letter for every audit to demonstrate to management that the firm add value to the business beyond the audit service provide. Each management letter should be developed to meet the style and preference of the CPA firms and the needs of the clients. Some auditor combine the management with the letter about significant differences and material weakness. A smaller audit, it is common for the auditor to communicate operational suggestion orally rather than a management letter. The fourth, management letter subsequent discovery of fact. After the auditor issues the auditor report and completes our communications with the management and the audit committee, the audit is finished. Usually, the next major contact between the auditor and client occurs when the planning process of the next year audit begins. The first auditor sometimes learn after the audit financial statement have been issued. The financial statement are materially misstated. And the second, when the subsequent discovery of fact occurs, the auditor has an obligation to make certain that users who are relying on the financial statement are informed about the misstatement or change in the conclusion on the effectiveness of internal controls. And and the third is if the auditor discovers that the statement are misleading after they have been issued, the most desirable action is to request that the client issue an immediate revision of the financial statement that include an explanation of the reason for revisions. And fourth, if the client refuses to disclose the statement, the auditor must inform the board of directors. The auditor must also notify regulatory agencies having jurisdiction of the client that the statement are no longer fairly stated, and also when practical, each person relies on the financial statement. Thank you. That's all our presentation. Assalamualaikum warahmatullahi wabarakatuh.